Warriors, a new page in financial history about to be written today with a new regime change. And who better to be able to talk to about handicapping the Fed than one of the best news traders on the planet, Adam Button, Chief Currency Analyst at Forex Live. Great to have you here on a day like this, Adam. I can't think of anyone else I'd rather talk to about what we're looking at today.
Well, start of the cycle here, Dale. It's an exciting one, and it's going to be fireworks one way or another, the way the markets are priced. So,
Okay.
it's going to be a lively one today. Can't wait.
How are you handicapping it? They're going to go 50 a quarter. There's very different narratives about what's going to happen today. Uh, I just want to get it over with. All right. But what are you thinking in here? Is he going to go a quarter and then be dovish during the presser? And is the presser more important than what he does with rates?
We can get to all those questions. First of all, what I think he will do is 50. I mean, if
Okay.
you listen to the talk, every economist is out there is saying, well, I think they should do 50, but they will do 25. And I think that weighs on the Fed. I think they'd rather get ahead of it. Powell wants to be the soft landing guy. It's his legacy at this point. He obviously missed hiking on the way up when inflation was going higher. And I think he thinks he can be proactive here. Inflation is very close to 2% at this point. They're at a pretty high rate. And I think ultimately that tilts them. The beige book was dovish. Unemployment has been rising. And they say, listen, we're going to front load that. Now, to your question about the press conference, I think it could matter a lot more because they can say, hey, we're front loading this, but it doesn't mean we're going to go 50 every meeting. We might not even go at all every meeting. We just want to get rates down a little bit and see how the economy responds. And I think that might even kind of be seen as a bit more hawkish. And in the flip side, if they only go 25 and say, hey, listen, if unemployment stumbles, we're going to cut 50. And, especially if you get a few dissents saying they should do 50, that could come out as dovish. So it's going to be the sum of the parts more than the
Okay.
headline, but the headline is the knee-jerk trade, and that's going to
So,
be a big
so
one.
if they go a quarter, the market wants to hear a Draghi statement. We'll do whatever it takes.
Yeah, I think they kind of gave that at Jackson Hole, right? We said we don't want to see any further deterioration on unemployment. And that was really told you that we're ready to do 50 at any point. We think rates are too high. They probably are too high. It's just a matter of how quick you get there. Now, in terms of trading it,
Yeah.
and I think there's a long-term pattern of that. It's people are intraday traders here. You're going to get a huge knee-jerk reaction on this, and then it will come back a bit before the Fed press conference, right? So you get a massive move, and then probably about 15 minutes that tapers out, 10, 15 minutes. You can buy that dip either way as right until the press conference starts and then close that. And I think we've seen that kind of move over and over again on that 30 minutes in between the statement and the press conference. And that's something I'll be watching for because of that dynamic where Powell is likely to play down the move either way. I think especially on 25, that trade really, really works well.
Okay. So use any disappointment on a quarter to buy the dip. And
That's right.
okay.
In FX. Yeah, you could.
Adam, it still looks like all one market to me. There's really no differentiation in the last few weeks. We've had metals higher, we've had equities higher, we've even had energy higher, we've had the grain start to come out of the hole. It's almost like long the world. The everything bubble continues, and here we go with some rate cuts. Let me ask you this about the dollar. Last time we were together, dollar was higher. I was negative the dollar, but we're at this major support level right here. To me, it looks like the pain trade would be because up here there were still plenty of dollar bulls, but it's not like that now. There's plenty of company on the bear side of the dollar. Do you agree?
Yeah, it's pretty balanced now, and I thought it's
Balance?
somewhat
Okay, that
telling today. You see bonds selling off a little bit
yeah.
ahead, so that's a little crowded. But you
Yeah.
also see the dollar selling off. You did. It's come back in a bit today. Something
Yeah.
like cable hitting almost the highs of the year.
Yeah. Cable
Um,
tried to break out of a bull flag here, and now we're back inside the
Kind of,
formation.
but that to me says, okay, there's just been a lot of dollar selling, and the sort of the fast money's been in the dollar sell trade and in
Right.
bond buying trade, and they're both
Right.
coming out a little bit now. Now, does that get it back to something balanced? I mean, dollar yen kind of looked like it was ahead of that move over the last couple of days because we saw a pretty big looking reversal there, but
Yeah.
then it kind
Nice.
of petered out a little bit today, and then we kind of, that shows me that okay, short term positioning is at least back to neutral-ish. Um, so I think you can go either way with the dollar based on what the Fed does. If the Fed does get aggressive, you can make a case, and other central banks follow, as they obviously will. You can make a good case for global growth picking up. Now, the big one on that's China, right? China needs to do something. There's so much pressure on China to get growth going. You get this sort of, okay, we are at the bottom of the cycle, right? I'm not big on that trade, but say we're at the bottom of the global growth cycle. I mean, there's will be a lot of dollar selling going on, but I'm not totally sure we're there yet, and we might need to see a lot more pain. In that case, you could see the dollar higher. Um,
Okay. So, I mean, to me, this is a sell if this occurs. If we get a rally back to 102.5 just to shake out dollar bears, I still think that, we're just sitting on the precipice of a major breakdown under par. You could see it pretty clearly on the monthly. We have monthly moving averages here. We have prior lows, and underneath this par, I think 97, 95 is doable. I mean, you could really make a bear case for the dollar here.
you got to be pretty bullish on Europe to do that, though. And that's where I run into
Yeah, I know. I
problems.
get that from people. Well, Dale, you don't realize how bad it is in the UK. You don't realize how bad it is in Germany.
Yeah.
I don't know how you could be bullish, cable and euro. Um, but I think it's just really, kind of a bear market rally. And wave structure wise, I think we could go 114, 115, and then take another look here in euro. And good eye on this yen. Did you see the COT data on the yen right now? It's extreme. Everyone is bullish the yen, which is bearish U.S. dollar yen. It's
What a
very
trade.
crowded.
What a trade dollar yen's been this year. And I
Yeah,
think it's going to be the trade today. I mean, you can make a very good case that we're going to see 400 pips come out of the Fed, over the next week, call it, maybe less. And that it's just amazing volatility in that pair. I mean, you
yeah,
remember not that long ago, you get 10 pip moves in a day, like 10 pip range.
yeah.
And now even on a quiet day like yesterday, you had upwards of 150. It's just an incredible, incredible trade right
Are you
now.
telling people to reduce leverage as they trade the yen now because it's a different environment and you really can't trade it with 50-point stops for a swing? The candles look small, but you're right. You look at the range of a candle, and even if you're risking the day's range, you're risking, like you said, 80 pips.
80 pips, yeah.
So, I mean, this looks like a small range today, but we're still talking about, well, I guess like we're talking about a pretty tight range. This is a 4 hour, but risk has increased for being a yen trader.
Oh yeah.
And
And I mean, people trade with way too much leverage as it is, but so you're always telling them to take down leverage. But look at that three candle reversal. It's
yeah,
it's pretty
and
notable there. And if you
and
can
look
fit
at
a
the
higher close today,
yeah,
I think that's something to go with back up to 144, 145.
yeah, and look at the divergence, not only on the daily, but shorter TFs were painting the same picture. So yeah, 145 or so, that would help take the Dixie back to
The
102 and a
bonds, right?
half.
Like that's kind of been the driver of falling yields. But and I think we talked earlier and I said, listen, all those people who regretted not locking in low rates, right? The 30-year fix when you could have got it
Right.
for 2%, are going to be regretting not locking in high rates when you could get a safe 6-7% in July and
Right.
June. And now here we are, those yields have been whittled down a lot, but 10s at 369, I don't know. And you can argue that if the Fed cuts 50, and even if we get a dovish 50 on top of that, you can argue that the terminal rate will be higher, right? So they cut more aggressively. They don't need to cut all the way down to say 2.5. They can cut down to 3.5. And in that case, if your terminal bottom's 3.5, you can't be buying 10s at 369. So
Right.
I am sympathetic to that argument, especially what we have Atlanta Fed GDP now running at 3%. The market could start thinking that, all right, maybe we go back to 380, 385 or something like that, maybe even 4% in
Exactly.
and that would lift again dollar yen, make kind of a nice dollar trade.
Right.
Uh, I
The
don't think
charts are identical. Look,
it is.
here's 10-year, right? Your second drive, this looks like drive two. Uh, Real nice divergence down here. Now look at the end.
Yeah.
Huh? I
I
mean,
mean,
they're tied at the hip now. They're like the Siamese twins. This correlation is tight now, isn't it?
I'm on board with sort of what bonds have been doing because I don't think inflation is going to be a problem, but
Right.
we can get through year end or through the next couple months a push higher in yields. I mean, you've got a lot of political uncertainty. You can have some turmoil in markets. The Fed, I don't think the Fed is going to be solved today either, right? I think we get
Yeah.
you get a little tunnel vision on today instead of 50-25. Okay, well, what about next meeting? They're not going to
Yeah.
tell us what they're going to do next meeting. You know what? Like we're not. If we do 25, okay, we could easily do 50 on weak data next month. If we do 50 and the data's strong, well, they could pare it back to 25, maybe even nothing next month. And decide they made a mistake. So um,
Okay. Yeah. I
I don't
mean,
think you can price 50-50-50 or 25-25-25, anything really in the next meeting. So we just restart again after this meeting.
the bonds broke out at this 94 level. It's comfortably above an important breakout. And but why can't we have a pullback like
Pull
this?
back.
And
Yeah.
that would they you be all over that for a buy
I
in the
would, I
bonds?
would, because I
Okay.
think inflation is done. I really
Okay.
believe that, China's still exporting disinflation, that
Yeah.
AI is disinflationary, that labor is going to be tapped out, unemployment will rise, and
Demographics are
nothing,
deflationary.
nothing's
Yeah.
changed. Nothing has
Yeah.
changed from 2010 to 2020 era of inflation.
Is Canada in a recession, Adam?
It's tough here. I believe it is. I think the Bank of Canada is way behind the curve. Housing here is just done. It's bad. It's going to get ugly. The investor class has completely abandoned housing, and anybody who owns investors who own housing would love to unload them, but I think they're still hanging on to the prices from a couple of years ago and hoping to get those, which they won't get.
No.
And it's a question of how policy here responds. And I think that the optimal policy is to bring rates down to say 1.5%. And the Bank of Canada will sacrifice the currency in that trade to some extent. But you need the home building. And I think people just can't afford the housing. I mean, layoffs, unemployment's up to 6.25%. Youth
Okay.
unemployment is at something like 15 or 16%. Um, it's not a really pretty picture. The
So you
best
could
picture,
probably get an intern to pay you to help you
oh,
out
no,
in an
yeah.
environment just to get the credential. Not that I'm thinking of exploiting anybody, but so the loony, last time we were together, I thought we were going to put in a top, and that happened. This rally is right back to this area that's been tested a million times. I'm not saying we can't go 37, but I remain bearish, and you have to sell strength in USD CAD. Do you agree with that?
Well, that's that global growth trade, right? Like I'm a seller if China comes around, if the Fed gets cutting, everyone else gets cutting, you get the soft landing, right? That's a soft landing trade is selling dollar CAD.
Okay.
Oil, a bit of an X factor, but not that big of a factor for CAD.
Okay.
We're going to get a change in government in CAD. There might be some nice flows on that. Canada fiscally actually has a lot of room. For all the trouble in Europe, the US, but fiscally, you can do a lot in Canada. So you probably are going to get some kind of tax cut with the new government, which could get things going. But I think it's like a 3-year project to turn around the ship at best.
Okay.
And
Well, you bring up housing, and you were bullish when things were exploding in Canada, and you were bullish, and you were right, and you were more bullish the U.S. housing market than Canada. Canada was the first country to cut rates, correct?
they were, yeah.
Okay, you believe they're in recession. We were behind Canada in cutting rates. Does recession head south from the Canadian border to the US? And could the US already be in a recession? And that's why the Fed is changing gears.
I mean, the 30-year fixed is truly a superpower. I mean, Canada, your home borrower here, remember mortgages are higher here,
Right.
is getting
True.
just slammed with higher rates. I mean, you're getting double your payment, more than double a lot of times in terms of mortgage payment. Um, there's a lot of home equity built up that's leaning against that. The US dynamic, you don't really have that squeeze. And then you have the corporate US is doing so well on the AI trade. The employment market is healthier. I think, the US may be in this period of exceptionalism, but what I do worry about on selling the US dollar is the fiscal side, right? The US is running these 7% of GDP deficits, where Canada's like 1.5. And, it's just a massive amount of stimulus. And a lot of it's like CHIPS Act stuff that's coming through even into next year. But then it starts to dry up. And it's at the same time, you're probably going to have a divided Congress. And then I don't know if anything gets done. And then you maybe get this sort of Tea Party movement again. And then things can really slow down. I mean, the dollar can suffer under that regime of fiscal
Yeah.
retrenchment. And then we kind of see, okay, how strong is the consumer underneath all that? Because the low end consumer is struggling in the U.S. Obviously, I think it's
Yes.
probably moving up the ladder, but
But
the fiscal side is so stimulative that that's sort of both sides of the dollar smile. If things get really bad, it can do badly. If we get a really nice soft landing, the dollar can do badly. If we kind of muddle along in the middle, the U.S. can do better than everyone else. And I'm
yeah,
sympathetic to that because there's not anywhere else to bet on that I really like. I mean, Australia's in the same boat as Canada.
there's
So
not a global growth engine. That's a problem next year.
China could be it. I don't think they
Could
want it.
be.
I think at this point you can't. No, I saw Bank of America's fund manager survey today or yesterday, and it's the most negative on China it's ever been, which is kind of the thing you want to
Contrarian.
buy, right?
Yeah, yeah,
But
yeah,
it's still, you want to see some kind of catalyst. You don't need to be the first guy through the door on that.
yeah.
But
Well,
maybe we get real rate cuts.
anyway, you did talk about consumer debt, and it's really two worlds because I looked at an Amex chart. American Express cards aren't held by, guys in the union and so forth. It's kind of the upper 10% that use American Express. And that chart still looks good. So credit quality for the 10 percenters or 20 percenters that own real estate and have a nice stock portfolio, things are still great. It's like the book I read in high school, A Tale of Two Cities.
Mm.
It's the best of times and it's the worst of times. I think the only thing that would crack them would be a stock market sell off, enter into a bear market, and maybe a taste of what's happening in Canadian residential housing down here in the US. And there are some people calling for it. They've been calling for it for years. But
Forever. That's right. I
yeah,
mean, it's like it's the 2008 playbook, and it just never rhymes that way.
Yeah.
US dollars are still a lot cheaper than Canada. I think there's still a big bubble to inflate. But then
Still.
again, America
Okay.
is pretty good at building. I mean, there are places in America, they talk about this as the relief valve. Like the southern US is the relief valve. Like they don't build in the northern US. It's the same as Canada, right? It's impossible to build anything, but you can build like crazy in Florida and Arizona. And so
Right.
that has just drawn people to those places and taken the pressure off, the upward pressure off sort of northern house prices in the US, plus the demographics moving down there as well to retire. And that's kept the US from inflating in the same way. And I think will continue to. Plus, you have like a movement to make it easier to build. And you have like a lot of publicly traded home builders that are in the
Yeah.
business of actually building. So yeah, the housing trade is a really interesting one, and I'm very bullish on U.S. housing. Uh,
Still.
yeah, and I think the home builders have been just a magnificent trade through all this, and
Okay.
that's probably the way to do it. And then there's probably some torquier ways to do it. But we talked about like getting out of currencies, right? Like there's no good currency to be in, and that's the gold trade. I see it on your
Okay. I
chart
knew you
there.
were going to go there. Okay.
And
There it
what a
is.
trade! What a
Yeah.
trade! I
Yeah.
mean, well, it's been incredible. And I think you looked at China right now and you say, okay, say you're in China, Dale. You used to be able to trade stocks and make money.
You
That's a
can't.
disaster. Yeah, that's a zero.
Right.
Real
Real
estate,
estate. Yeah.
zero. So you've got money in China. Where are you going to put it?
Gold.
You have capital controls, so you can try to get out of the country, but they've been doing that forever. But if you're domestic, you can maybe buy some bonds and something or other. I don't know, but that's it. And gold. And I saw volumes on Shanghai gold trading like insane. Like, and it's maybe the scary part about it is maybe it's some kind of bubble. But eventually,
Well, it's
I
not a
think,
contrarian trade, that's for sure.
yeah, but I mean, the momentum is just incredible. That chart looks great. Central banks cutting rates. If you're dollar bear, deficits are a problem.
So if we get a pop, and this is what I'm hoping for, we get a pop in the dollar, the pain trade squeezes shorts, we should have a nice pullback. And I think this is going to be important in gold, Adam. We just broke out over this last week. So I think gold has to hold it. Um, but I'm more interested in silver now because I do think that there's a turn coming in the gold silver ratio. I look at, I wanted to just ask your opinion on this. So you look at, let's just do like a monthly. And you see how you had this spike here, right there? You had the same thing, and then we never really retraced much. I mean, these were obscene ratios. I mean, I remember when the mean was 40 and
Yeah,
50
wait, can you
through.
go all the way back to like 2008 or seven with that? Does that
Yeah,
go wider or are we maxed out?
there you go, 7.
Yeah.
Okay, and there's 8. Uh, but the point I want to make is it looks a lot like the dollar, where you had that spike right here, and it never really could recover, and the dollar is now drifted back down to major support. So if the XAU does the same thing, that means 70. Okay, so I think the bang for the buck is going to be in silver. And then if we ever break 70, you're talking, you know, 50, 40, how it used to be. But, my preferred long right now for this scenario is silver. Beginning to outperform gold. I've watched its range for a while. I think last week was important. That's a monthly, but I think last week was important. So there could be big downside even in that trade. Do you know if you could trade this as the CFD,
I
buy
do
and
not
sell the
know
gold
that.
silver ratio?
I don't trade that ratio a lot. I've never traded myself or made that sort of trade. And there's a lot of people making a compelling argument that like the industrial side of silver is pretty tight.
Yeah. Oh,
Um,
deficits forever.
yeah.
And they do have, and I'm not talking about 200 right now. I'm talking about 33, $34 silver for the next wave. and then another correction. But they also have batteries. We need
Yeah.
battery
Solar
technology.
too.
Yeah, silver, and they've come up with a battery that uh, works better on silver than lithium, and it's actually cheaper to build. So, yeah, what do you think about my silver call? That,
I like it too. I mean, I like it. I like it when I look at that silver gold chart, though. That's why I wanted to go back to 2009, is that I don't think you get a peak in gold until you see a blowout in that ratio, right?
oh, you
One way
mean
or
a
another. Like
new
the precious,
highs?
yeah, the precious metals like rally doesn't end until you see some sort of blowout in that, and then you get it kind of just shows like a speculative, like you saw in 2020 there when it starts to
Okay,
blow
you mean
out.
like
And then back in
this?
2009 when you had gold highs, you start to see that like way back at the start of that chart, and then
Okay.
that sort of signaled the end of the precious metals rally. um
Okay, where are
I
you at with the industrial metals? I know you pay
Well,
attention to
you
copper.
need China. I think we need China. I'm a big copper bull. It's always been a 2026 story. It's still a 2026 story, and it's how early you want to get into the 2026 trade. And, in a dream world, we get the Fed being late, we get poor global growth next year, get a recession in, a lot of places, maybe even the US. China's still slogging, and then it starts to turn around, say mid 2025, and that's the time to pile in, maybe a copper below 4.
Okay,
And I think that's sort of the dream setup. But the other way to
it's good
trade
to
it,
dream.
the other way to trade it is just say, you know what, 430 is pretty good now. Maybe it goes to 3.5 in a really negative scenario, but coming into 2026, it looks great. China's probably got nowhere to go but up, and that's half of global copper demand.
Yeah,
And AI infrastructure, power. I mean, you see it every day on CNBC. They're talking
yeah.
about the power build out. It's not a fake story. There needs to be so much electricity infrastructure built out, that's it can be just a trade on that.
Yeah, well, I mean, the utility stocks are getting a play on that, on the data centers and all the energy that's going to
Natural
be.
gas too.
Yeah, I was going to bring that up, but this was a pretty good pullback for a bull market. Uh, Buying opportunity at 4. You could also just be wrong under 4. Short term, I would use any disappointment or sell off of risk to buy everything, and copper would be another one I would do maybe if it pulled back to 420 or
But it
so.
is it is if you like, I think the super copper trade is a 2026 trade, 2027 through the end of the decade, and
All right, well, you
I
have
don't
more
think you want to
time
miss
than me. I need something for today. I'm kidding. Anyway, I wanted to cover energy because I know that's something you pay attention to, and we had this. We had a breakdown as far as I'm
that.
concerned in WTI. Here's the chart. We broke down here. We're retracing back to it. It's been a nice bounce. Does it have staying power?
I think it does. I mean, the spec positioning is ugly, right? It's I think the
Everyone's bearish.
most bearish ever. In a lot of it. I mean, the US buying SPR barrels. I saw yesterday 6 million barrels, adding back to the 180 million they sold. I think that'll get them up to about 60.
That was a great trade. That's the
I
best
think
trade the U.S.
credit, I think
government ever made.
96.
Huh?
96 was their selling price.
Everyone was
So,
saying we were going to be caught without. I thought, was foolish. Anyway, nice trade, Joe. So
and
no matter what you,
I
no
mean,
matter
the
what you think,
risk is
huh?
OPEC breaking down, right? I mean, there's
Yeah,
still 2.5 million barrels out there of excess supply.
yeah.
And, UAE has been investing a lot, wants to pump more. It's basically the Saudis, some help from Russia, a couple real close Saudi allies that are carrying the oil market. But how low can you go? Like 60 now is like 45,
Inflation
pre-inflation era.
adjusted. Yeah.
Yeah.
Okay.
And yeah, they can drill a bit cheaper. They're pretty efficient, but there's a lot in the world like offshore, conventional exploration that starts to get pretty tough. That doesn't mean it can't overshoot though. Especially you get that like I think it's been a global growth trade. That's why it got forced
Yeah,
down, and that's why everyone piled into it. And
yeah.
I don't love that trading oil on global growth angle. I think
Okay.
there's a lot of people
Because there
try to
could
use
be
it as
supply shocks. It's not always about demand.
exactly, and you can adjust supply to, and consumers even. It's not that inelastic, so.
Yeah.
I don't really see that bad of a global growth slowdown right now. Again, I think all central bankers are behind the curve, but let's get some weaker data. I mean, German data did bad, but that's if it gets worse in China and the US, sure. But I think it has to get worse before I kind of endorse that trade. I am pretty cautious though.
Okay.
I'm not.
I have a lot of conviction about this, Adam. It was during that week, that Friday, that week when the market was getting slammed a few weeks ago. And my training is, when you have a red board, look at what's green. When you have
Yeah.
a green board, look at what's red because they're speaking to you about their relative strength or weakness. And this was a day that we had the S&Ps crash and close on their butt on Friday or during it, maybe the day before. And the only two things that were green that I saw on a heat map was natural gas this day and wheat. Okay. And I turned constructive just because of that. And since then, we've had a little breakout over 220. I think I would buy a break in natural gas. I think that perhaps Europe isn't going to be as fortunate with the weather as
Weather,
they
the
were
weather
last
trade at
year.
this time of year. I mean, the cold weather is a nice little seasonal kick here. Once you get some cold weather, people start to worry. It's interesting, the Gulf of Mexico, this is peak of hurricane season,
Yeah.
but it's been cooler there. There's something going on with the weather that's kept it its upper level. I don't know. I can get into the weather with upper level shear and whatnot. Not exactly cooler, but
Yeah.
we haven't had a cold winter since about 2014. And that could tighten it up. The power burn this summer has been really high in natural gas, surprisingly high. We had a draw about 3 weeks ago in the weekly natty numbers, which was like the first time in 20 years in the summer, because
How
usually
about
it
that?
gets burned in the winter, and then the inventories build in the summer. Now you have so much power burn in natural gas because coal's been replaced, that and air conditioning is running pretty, pretty intensely. That you had these draws in the summer. Plus, prices have been low, so producers have been cutting back. Now, like where it gets scary is even at 3, you get a lot of guys throwing open the taps again,
Okay.
and there is quite a bit of supply in the U.S. But starting second half of next year, you get a lot of LNG starting to come on. And that's going to be a big mover. And then you have AI and data
Yeah.
center and more power construction. And I'm super bullish on natural gas in the long term. But it's such an interesting commodity because you
Yeah.
have so many things coming at once. You have the energy trade, you have the AI trade, you have a weather trade, and you have a natural resource that's abundant in the US, not in many of them, but Canada, US, Middle East, but certainly not in Europe.
Yeah.
And it creates a really, really volatile dynamic, and it's always been volatile.
Yeah. So I think, if we pull back to 210, I'll add to longs. This would just be a correction of this. And you talk about $3 being tough, and I see that on the monthly. But longs from 210 to $3 is a great trade. So I'll take it if we get back to that. This is the resistance that Adam's talking about that we were rejected from a
Let's
few
talk a bit about
times.
stocks, Dale. I can't. We're on a if we're
All right,
we're a
go
bit
ahead.
up right
All
now.
right, all right. So
Is
where are you at? Are we going to
Well,
have?
it's a nightmare for the Fed. Your 8-day winning streak in the S&P 500 coming into the decision, which is, if you count today, um, that is a tough hand to be dealt because no matter what you do, you're kind of overdue for a negative day. Historically, though, Fed Day is the best day of the year to own stocks. So that's a good one to know because they usually are more dovish, or give you some kind of dovish hint, or the anxiety sort of lifts about whatever it is they're going to do, and you get buying. But we've seen, I think this year, going by memory, a few days where the day after the Fed gets starts to get pretty ugly, and that's what I'm worried about is
Okay.
tomorrow,
All
and the
right.
market kind of kicking and screaming. But the technicals on it are incredible, right? We're right at the top, walking right into the Fed. Maybe you get up to that 3 on your chart, you get like an
That's what
explosion higher today, maybe tomorrow, and then blow it out back down, catch
that's
everybody
around
chasing.
5,900, 6,000 for a third drive. That's what I'm expecting, like a melt up into the election. They
Into the
hold it
election.
together
Bold
into
move.
they hold it, that's only
45
6 weeks.
days.
Yeah,
45.
6 weeks
Yeah.
that we're melting up into it, which would I believe would favor Harris. If we get a big crash going into the election, I believe that would favor a former President Trump because he could say that, the market's worried about her being elected.
Makes
Um,
sense.
so I think that I think the S&Ps are going to determine based upon people looking at their 401ks at the end of October many people who they're going to vote for. But I think we could get a 3. And I just wanted to ask you one more thing. I know you cover crypto, right?
Yep, absolutely.
Okay, so I want to talk about this. Do you agree that Bitcoin, besides it being whatever people believe it to be, is also an indicator of liquidity in the market, that it's driven by liquidity like everything else?
Well, I'll say this, that I mean the correlation between risk assets and Bitcoin is very high. The Nasdaq particularly, and then within the Nasdaq, the chip names.
Okay,
And if you look at trading volumes on something like Nvidia, like they're insane. Like it's like all the Mag 7 combined isn't as much volume, dollar volume as Nvidia on a lot of days. And that is a lot of liquidity in the market. And now that it's coming down, that's coming out. And Bitcoin has been pretty disappointing, even on the good days. I mean, yesterday was a good day, but it hasn't been able to get close to these 70,000 levels from earlier in the summer, and stocks are right at a new high today,
that's true.
bordering on a new high. So I do worry a bit about that divergence, but it does align a lot more with the chip stocks. In the liquidity way of thinking of it, liquidity should improve as rates come down. I'm certainly more inclined to lever up. And does
This
it
looks like
trickle?
a this looks like a bullish chart to me, Adam. I mean, you had this move from 16 grand to 72,
Well,
and
that's
what we've
definitely
done is work off the overbought condition more in time than price. I doubt this is even, maybe it's 38% back of this. But if we crack 69, it measures over 100,000.
It's gone
So,
quiet. I'll say that. It has
yeah,
gone very quiet and it hasn't done that poorly. And I kind of feel like there needs to be some kind of catalyst to get it moving. And I don't know what that might be, but if I could see one, I could totally get behind that.
okay,
I think a lot of
just
it's being overshadowed by AI right now. A lot of people have moved on.
okay. Well, I think that what's going to fuel it is what's fueling everything else, is that we're going to have a melt. The everything bubble continues until year end. I don't see it. Here's why I feel that way.
Yeah.
And my followers know, I love to be short. Okay. My first trade as a runner, I had a local execute a trade for me when gold became legal again and opened at 200 an ounce US dollars, fell
Beautiful.
to 100. I didn't write it down, but my first trade was a short sale and it worked fast. So it's killed me in bull markets, my proclivity to want to look for shorts.
Yeah.
But I look at what's happening here. I think there are going to be great shorts across the board, but we're not there yet. I think that if we're going to have this melt up, it should happen now. And you talked S&Ps, so I'm thinking higher Bitcoin. there's been a lot of disappointment, and we'll wrap it with this, that everyone thought, guys like Tom Lee and all these guys thought that the Russell would way outperform and even double or something this year. It's starting to look better. Like, for example,
Good
today
day
it's
yesterday.
still higher with the Dow lower and
Yeah.
S&P's flat.
Yesterday was a nice time. You know that,
Yeah.
and I think, I
So
look
we
back
blow
in
off
this
here?
year. What stands out to me is that July divergences. It was running up, and
Yeah.
everything else was sort of
This.
suffering.
This was a
And
great a rebalancing trade
well, that's what
right
it
here.
was, right? And
Yeah.
everyone was short the Russell along the Mag 7, and they were getting out, and then it proved to be the right trade, and it looked kind of like a top in everything there. And now maybe not. I mean,
Yeah.
AI, the ChatGPT kind of came out with this new model last week. It looks kind of interesting. It's an improvement, right? There's no stall. The
Yeah.
spending seems to want to keep going on that. I mean, these multiples are pretty crazy, but you can't fight it while the AI train is rolling. And so but it is a lot cheaper. And if we get rate cuts, obviously you want to
Yeah.
be long Russell in a low rate world again. So maybe both can do well. I don't know, like
Yeah.
that.
Well, it should be the speculative side of things should be able to outperform.
Wow, what a
I work
chart
with,
that is. That
yeah,
that
that looks bullish to me. It's a nice looking month, even though we're only halfway through. But there are stocks that are bankrupt that are flying. The stock
yeah.
called
The meme.
the Children's Place.
I
Now
mean,
it's
we never
got a
like
nice name. I love
we got one
children.
of those here. We got one of those here.
All
Yeah,
right, well,
keep it going.
they're bankrupt, and the stock's been skyrocketing in the last couple of weeks.
Not this shit.
Yeah,
I mean, the
that's what's
meme
going
stock
on.
stuff, I don't know. It's a short history of it. I don't know if there's really been that good of a signal from it. You can look back to kind of
Yeah, it could
the
be.
there, the real excess post COVID with low rates, and the memes were going crazy every day, and that was probably a sign of a top. But it got really excessive, right? And the
Yeah,
memes haven't really died since then. You
yeah.
get one or two, you get them here. GameStop came back early this summer, and people want to play this meme stock game. I don't know if it's more noise than signal because it is ridiculous,
Yeah.
obviously. And
So,
it's,
people say the Russell are stocks that don't make money.
well, I don't know.
Uh, all
I
right.
mean, the
So
PE is not that bad.
rates will help them. Lower
Well,
rates.
yeah, that's it. I mean, so far they've helped utilities. I mean,
Yeah,
low rates will help everything.
right.
Um,
That's what's
and
going on.
that could be where we are if Powell's determined to try it. I don't think you can price in inflation yet.
No.
So if they cut 200 basis points, I still don't think you're going to see an imminent inflation, especially if that fiscal side comes in. Um, so that it paints a really nice picture, but you try to look for risks in it. But
Yeah.
if China gets going too, and I keep mentioning that because I think it's such a big part of the equation for a lot of what needs to happen. But it doesn't
The
look
bi-
that bad. But like let's bring it back to today. I mean, if you cut 50, it does go a long way with a dovish 50. If you cut 25 and you're dovish and say 50 might be coming, like I think you probably buy that dip. Aside from the intraday trade, it could get ugly. I mean, we're on an 8-day rally, so you take away, say, half of that rally. That's probably a good place to buy because you've got the Fed in your pocket now, right? You've got a huge Fed put, whether it's stocks, employment, whatever. And if it really were to get bad on unemployment, it'd just be 50, 50, 50 or 100 B. They'll get her down to 2% if they need to. And if they're
all right.
slack in the labor market, I think it just reiterates that inflation is over.
Well, you know what they say, the biggest part of the move happens near the end. So when you think about the S&Ps being a prolific bull market like they have been for so long,
Yeah.
I don't see it ending with a whimper. In fact, I love the expression that markets top with violence and we're starting to have some violence, right? We're having a little bit of volatility. I mean, the VIX did go to 60, it was aberrational, but it still happened. So I figure that, here we go. And it's going to end dramatically with the melt up into, may I say it again? They hold things together until after the election.
Well,
And
I mean, let's get on it then.
yeah,
You know what I
yeah,
mean? That's it. And
yeah,
I'm a lot more cautious, but I think you can make money in like long duration, long bonds,
yeah,
utilities, anything that benefits. I mean, those multiples can go up as well. And that's sort of where I am right now. And then if the global growth trade gets going, if central banks really do get on board, and the BOE is tomorrow as well, I'd love to see
yeah,
them cut. I'd like to see the ECB be a bit more dovish. China is going to cut, it sounds like this month, if they get serious about stimulus. You kind of can really start to make the case then that we're at this sort of start of a global growth cycle, and investment cycle. Now, governments are going to be definitely need to be in the end of a fiscal growth era, but those things that do well, like stock markets do well in like middling growth, 2.5% growth with very low rates. I mean, that was the playbook for all of the 2010s, and it was a wonderful time for equity
yeah.
markets. So
I don't know, Adam. I don't think this is the beginning of anything. I think it's the ending of things. A lot of wave fives out there. So I'm not buying that we're just starting a business cycle. I just think this is
that's what I'm saying.
how,
I don't think I'm not there yet either, Dale, but
yeah,
I think that's on my radar as
a
I'm pretty cautious
possibility.
right now.
Yeah,
But that if they stick the landing, I mean, they had history is against them.
yeah, yeah. I think they stick the landing on their head.
Yeah.
And anyway, Adam, was I right? Was this what I said before the
Yeah,
show?
Dale, listen,
Huh?
I appreciate these talks.
Yeah, me too,
The
Adam.
dollar trade has been a heck of one. It's funny you say you got this bearish inclination. I'm very bullishly inclined, but I always love talking with you.
Yeah, it's great. We bring balance, and it's important that people look at both sides, a bear case and a bull case for everything that they trade, so they're alert when the other side of the trade is starting to show its face, and they're reassess at that time whether they want to flip or just stand aside. Know the bull and bear case of everything you trade.
Definitely, definitely. Well said.
All right, buddy. Well, hope pips rain down on you
Take
today,
one,
man.
Dale. Well,
Yeah,
we'll be trading it live. We'll be talking about
yeah,
that trade between the decision and the press conference. I think that's the trade for today.
yeah,
As usual, we're 3 hours away, so it's
yeah.
just
Log
good to
in.
be in markets today. Feel blessed.
Yeah, log into Forex Live for that coverage. And Adam was going to do well. He has a lot of mouths to feed.
Four. That's it.
Yeah, that's
Getting
what I
bigger.
mean.
They're
So,
getting they're getting
you
stronger.
talk about trading under pressure. Traders that support their families off what they do in the markets, you have to respect them. So, thank you very much, my trading warrior brother. Great talking to you.
Always a pleasure, Dale. You have a great day, and we'll talk again soon.
All right, Adam Button, everyone, follow him on X at uh, FX
FX_button.
underscore button and check out his research all the time at Forex Live, and they will be covering the Fed Live. See you, buddy.
Take care.